Hi, welcome to Anders CPAs and Advisors and another edition of PPP with Dan and Paul. Things have been a little quiet over the last couple of weeks because the SBA and Treasury obviously are trying to figure out where they need to go next with their instructions, and unfortunately that doesn't trickle down to be able to provide you information that we need to. But we really feel like that a couple of things have changed. We want to address those today, some general changes that we think may change again, but we have no idea. So Dan, why don't you go ahead and tell us what you know at this point?
Sure, thanks, Paul. The Treasury and SBA released a set of loan forgiveness FAQs on both August 4th and August 11th. Those FAQs addressed a couple things and clarified a few things that I'll touch base on here. The first is transportation costs. There was a lot of confusion on what that really meant. And the FAQs clarified that the service for distribution of transportation means transportation utility fees assessed by state and local governments. The FAQs also clarified how the wage and salary reduction for loan forgiveness is calculated. Only salaries and hourly wage rates are included in the reduction calculation. Bonuses and other forms of compensation are not and will not impact the calculation. A question does remain in regards to tips. Are they or are they not included as part of the hourly wage calculation? At this point, I tend to think yes. However, hopefully we get additional guidance in the coming days or weeks. Additionally, there was some clarification in regards to retirement plan contributions and really the timing surrounding those. The FAQs addressed that retirement plan contributions are considered eligible payroll costs if they are paid within the covered period or incurred within the covered period and paid by the original due date that may be outside the covered period. What still remains as a question is 2019 accrued retirement plan contributions for the employer, in which an employer may have extended their tax return, making the employer retirement plan contribution not due until September 15th. So the question remains, if you pay your entire 2019 retirement plan contribution within your covered period, is that all considered eligible payroll costs, or will that need to be prorated in any way? Remains to be seen. Further, the FAQs clarified that forgiveness amounts for owner compensation is limited to 2.5 twelfths or 850 seconds of 2019 owner compensation across all business lines in which there is an ownership stake. So owners, if they have multiple business lines, cannot get loan forgiveness for compensation, the maximum compensation from each of those businesses. It is aggregated, and compensation to owners is limited to that 850 seconds or 2.5 twelfths across all their business lines.
Okay, Dan, could you maybe clarify a little bit about forgiveness by entity, though? I know there's some question there.
Sure. So yes, there are differences in regards to forgiveness on owner compensation for each different entity type. So owners for S corporations are limited to the cap on their 2019 cash compensation, as well as being limited to 2.5 twelfths or 850 seconds of their 2019 employer retirement plan contribution. So they don't get their full amounts like the typical employees. They are limited based on their 2019 employer retirement plan contribution. Also, for S Corp owners that have a greater than 2% ownership stake, health insurance is not included, as that is supposed to be grossed up and included as part of their W-2 wages. For C corporations, the owners are limited based on 2.5 times of their 2019 compensation. They also get to include the full health insurance, employer paid health insurance, as well as 2.5 times the amount of their 2019 employer retirement plan contribution. So the difference between the S Corp and the C Corps is C Corp owners, you do get to include their health insurance, whereas you do not get to include that for S corporations. For Schedule C sole proprietor businesses, the forgiveness amount is limited to the 8/52 or 2.5/12 of their 2019 net Schedule C. It is called owner compensation replacement. Nothing in particular needs to be done. There will be that automatic forgiveness subject to those limits. Lastly, for partners in a partnership, the forgiveness is limited to 2.5/12 or 8/52 of the 2019 net self-employment income on their K1. So the difference here is the partnership must make payments to the partner to be eligible for forgiveness, unlike the Schedule C businesses, sole proprietor businesses that get automatic forgiveness deemed owner compensation replacement.
Okay. Well, that's a mouthful, Dan. I mean, if you think about these changes, they came out with little fanfare because I think we all think that as we move forward and some of the potential changes in the CARES Act 2.0 may even further address some of these. So now we have a clear understanding why banks, and if you are talking to your bank, most of them are telling you that it may be early to mid-September before they're really to accept your application so that you can obviously achieve the maximum forgiveness that's desired. That's what they want. I think that's what everybody wants in this process. And when there's still confusion out there, it's going to reign the day. It's going to make sure that we try to push this off as far as we can. So that's been our guidance to all of our clients, is to be patient and move forward when it's the appropriate time to move forward. So we want to thank you for joining us today for another episode of PPP with Paul and Dan, and hopefully the next time we join you, we'll have additional information. Thanks and have a great day.